here we'll look at the stock market. So the stock market is really incredibly strong this week. Lots of reasons you could talk about, but really what I talked about in the beginning of the show is that investors just simply are not looking at anything other than the support from the Fed, and using that to be able to look over the entire crisis. We're now double crisis of the economy in the worst recession since the Great Depression, and also the crisis of the pandemic going on. So the pandemic not going to get solved anytime soon. The financial crisis not going to get solved anytime soon. So what do you have? You have the Fed. Well, in the meantime, that is being reflective in the stock market, which has managed higher prices. So let's take a look at what we're looking at here and what happened and what we think is going to come moving forward. So we'll put up now as we look at SPX. So here is the SPX chart coming up right now. And there you will see the up move that we had in here is quite strong. And this low right over here getting down this deep to the 78.6%. The probability of getting up here to that old high when you get to the 78.6% is small. So this was the reason that we were quite negative, believing that the top, which was set by that island back over there some weeks ago, that is, in our opinion, the what we see happening here is a test of those levels up there. So we thought that if it could get up and close above this 31.55.75, that, well, we'd have to reevaluate even if it got there, and that's what we've done. So we've upgraded our targets for the downside in here, and this points to the next 5 to 7 days. So these numbers now on the support level are 3102, 3082, and 3064 on these minor supports, and we think it's a high probability we'll get under 3100 in the next 5 to 7 days. 3082, that's not very much, it's barely 2% on the downside, and for us that's a pretty significant upgrade. It also does push out the much bigger decline, which we see coming in mid-July and early August, out over into this cycle. So we thought it would be starting in this cycle. We thought we'd have two waves down, the first one down on this timing at this cycle low, and the second one in this cycle that's way out over here. That would be a very, very strong likelihood that the intermediate patterns and the short-term patterns bring you that decline out into August. Still, you can see there's been no breakdowns in here whatsoever. It tested this level here and then bucked the odds and then came up to this kind of level right up over here. That is not, in our opinion, normal, but sometimes the lower probability things do happen. So that's where we are right now. For the next week to week and a half, we're expecting a pullback in here. This minor cycle right over here, 10 days, that's what we're looking at. The dominant cycle about 20 days. That would make a high probability of a decline right over here. Now it's Friday on a pre-holiday day. The S&Ps were up over $50. And look at the triangular formation that's being formed in here. Again, that would be the probabilities of it coming down are high, but then of resolving itself above these levels rather than below these levels is also high. So it's hard to make a very negative case in here. Also, the positive momentum we had in here, which went neutral and began to chop, is now turning up again. Now, it could turn down again. It's not much. We don't have much in the way of momentum in here right now, and it is just choppy. So we're going to call for the next 5 to 7 days a move down over here into these minor support levels in here, and then projecting out the following couple of weeks would be another rally to these levels, and then the big downturn But the downturns in these intermediate patterns have tended to be about 3 to 4 weeks of some severe decline. So that would work out to mid July, right over here, to the time when we now think that top would come, and then into the middle of August. Something pretty severe on the downside. So maybe they start focusing on the election at that time. We're going to be getting pretty close in here. Who knows about COVID? And the worse it gets, the more the market likes it, it appears, in this horrible condition of so many people sick. So it's really hard to tell about how COVID is going to affect it. It really is not now, as you could see that. So 5 to 7 days to the downside, attempted rally, and then a very big decline into August is what we see. And again, we're looking for long-term, intermediate-term projections down into that 2830 level on the S&P 500. We've had no reason yet to upgrade that, but again, the market will tell us about that going into the future. That is our short-term view for the S&P 500, as you can see, and what our projections are for the coming week.